and we will roll. You good?
Yep.
All right. What's going on, everybody? Welcome to the show. Today's guest, I'm excited about this. I've heard of her for a long time. Her name is Amanda Hahn. She is a CPA, a nationally recognized tax strategist and top-selling author. She is the managing director at Keystone CPA, Inc., a firm that specializes in proactive tax planning for real estate investors nationwide. She's been featured on prominent publications like Money Magazine, Talks at Google, NBC News Radio, BiggerPockets, Forbes, many others. Also a member of the GoBundance women's community. Amanda, it's exciting to have you.
I am so excited to be here and talk about taxes with you.
Well, you literally wrote the book on tax strategy, and then as if that wasn't enough, you had to go and write the book on advanced tax strategy. So we're going to get a lot out of this, I think.
Yeah, you got to give the people what they want. You know, we wrote the first book and there was people just wanted more. So we said, well, how do we give them more? So give them a little bit more of an advanced topic and, you know, see where we go from there.
You ever consider expanding the franchise to like Generation X, so like the illest tax strategies or something like that, just to, you know, same content. You could change it a little bit, like yo instead of hi or whatever, but
right. Yeah. For different audiences, right?
So before you became, you're on the Forbes Council and Talks at Google and NBC News Radio, all this stuff about tax strategy. Did you grow up dreaming of one day being one of the foremost experts on tax strategy in the country, or was this something that kind of came on? Give us that story. How did you become who you are today?
Yeah, it's funny. I actually did always dream of becoming an accountant.
Wow.
As shocking as it is for people to hear, because I don't think a lot of people grow up that way. But my mom was an accountant and, one of my uncles was an accountant. And I just always thought that's something that I would do. I was always good at math and I really like numbers. But real estate was something that came much, much later. I started my career at one of the big four accounting firms. So I was doing tax returns and tax strategies for, some of the super wealthy, individuals and companies. And never thought I would do real estate myself. It was more of just, I was a CPA for other people who invested in real estate. And it wasn't until I read the Rich Dad Poor Dad book when I started to realize like, hey, maybe I can do it too. This why not me started floating around in my mind.
How many clients do you recall? Like how many of your clients were real estate investing or real estate investors when you made that decision? Like, was it intriguing you looking like, oh, wow, that's interesting that they do this. And I see with the impact on their taxes, but I'm not enough. Is that kind of what the thought was until you read the book? Or was it more, I just don't truly understand it? I'm just kind of curious what that pivot was.
Yeah, it's interesting. So I'm actually the third generation of real estate investors in my family. So my grandparents were real estate investors. My parents also invested in real estate. But they were kind of like the traditional real estate investors. Like, for example, I grew up and lived in the same community where my grandparents owned the condos. So I would go with them to like pick up rent checks, deal with tenants, do like the turnover stuff, painting. So it just wasn't something that I wanted to do. It wasn't like a glamorous view, right? So I just wanted a corporate job. That's what I did. I helped other people save on taxes and just never thought about why I should invest in real estate. And I think the book kind of opened up my eyes. I started looking at my job differently. I started to see, the clients is like, oh, wow, this is someone who made a ton of money, but didn't pay taxes. So it was more kind of putting that personal benefit to the job I was doing versus just, I think a lot of accountants, we see the numbers, right? This plus this minus this and kind of get to the end. So I think the book really helped to shift my mind frame and how I looked at investing and wealth building.
What did you start with? First real estate investment, were you passive? Did you buy a duplex like your grandparents, their condo, or what did that look like? The first deal, if you will.
Yeah, it's so funny. So I took the exact opposite of what my grandparents did. Like I said, we lived in the same complex as the tenants, right? We were like the landlord's kids or grandkids. The first property my husband and I bought was out of state. Never looked at the property. At the time it was just, you see listings online, couple pictures and stuff. So yeah, bought a property sight unseen. But of course, being accountants, my husband is also an accountant. We ran the numbers, and because the numbers worked out, we just kind of pulled the trigger and did it.
What? How far out of was it fairly local, drivable to you, or was it kind of like you got to hop a flight and get there?
Drivable. So I'm in Southern California. Our first property was in Las Vegas, which is where I grew up. So I'm very familiar. So even though it's
Sure.
out of state, it wasn't like, somewhere super far. So I did know the area. I could drive there for 4 hours. But what's so interesting, actually, even today, I think we've probably gone to that property like once or twice just
Yeah.
to, drive by and check it out. But yeah, it just kind of took a whole different, I realized I didn't want to be, boots on the ground, and be like that very hands-on landlord. So very different than how I grew up.
Sure. When was that? What year do you recall?
Gosh, 2007, 2008.
Oh, right in
Um,
the so did
the best
right in the
shopping time, right?
now,
It's
where were you on
funny.
that? Were you on the front end of it? Did you buy at the peak or were you right after? What did that
Uh,
look like?
yeah, I bought kind of as prices were going down. So it was kind of like, when people started to shy away from real estate,
Yeah.
we were like, well, this is a great time to buy. And, I think at the time it was kind of scary, right? Because when you see other people running away from real estate and you're out there, making offers and acquiring stuff, it was scary, especially for me as a newbie investor at the time. But, now looking back, it's like, man, I wish I would have bought tons of
Yeah.
property at
Yeah.
that price. It's like the biggest regret.
Yeah, no doubt. Did you continue to expand there? Did you just kind of do that one deal and then find another market?
Yeah, I mean, most even today, a lot of the stuff that we're a little bit more involved on in our mostly in that Las Vegas area. We've also done a lot of passive investments as well. Just because we have a lot of clients who syndicate deals, and for me, I think it's a really great way to leverage other people's experience and their time, to help build wealth where, because I don't really myself want to be super active.
Yeah, makes sense. When did BiggerPockets come in? I feel like that was sort of the beginnings of you as a brand. Tell me if I'm wrong on that, but I feel like BiggerPockets was sort of the entry of where you started to get some notoriety or what's the word I'm looking for? Become somewhat known. I don't know if you were
Yeah.
blogging or just in the chat rooms or whatever, but kind of give me that ascension. What did that look like?
Yeah. So actually my by the time I think when BiggerPockets reached out to me, it was because they saw me speak. I was doing a lot of speaking for people who were in the apartment space. So back then, Dave Lindahl and some of these other people were holding these large real estate conferences. And so my husband and I did a lot of educational content for them. Locally, we did a lot of speaking as well, which I think could be the reason why I reached out. But yeah, the funniest story is I didn't know what BiggerPockets was. Podcasting wasn't like a huge thing. They just
Sure.
asked for, me to do something. So I did my interview with Josh and Brandon at the time and just never thought about it again. And I think, as the years went on, a lot of people who were contacting us said, oh, I heard you from BiggerPockets. So I thought, well, maybe I should check this out. What's BiggerPockets all about?
Yeah. Yeah. How did you get to the book? Like, how did that come about? Like, what did you start doing to become sort of connected to BiggerPockets in the way that you were?
Yeah, that's a great question. So actually, it was at the time Brandon Turner was, from being on the podcast, then he later became a client of mine. And, we're always talking about taxes and, mistakes and things like that. And he said, you really should write a book. And it was kind of the same thing, like, I don't know, I'm not an author, right?
Right.
Like I'm
Right.
a CPA, what am I going to write about? So kind of put on the back burner. And there was a time my husband and I went on a cruise and brought some tax books with us because that's what CPAs do. Like we read tax books when we're on cruises.
Wow. You are on purpose. You're in your purpose. So that's good.
Yes,
Yeah.
yes. And it was just, it was just really super boring, I think, for me to read book after book about taxes. And I just had this thought come across like, wow, if it's boring for me as a CPA who does taxes, how would an everyday investor get any benefit out of some of these, supposedly real estate tax books? So, we just started writing an outline like, okay, well, let's do it in a story format. Let's share success stories and nightmare stories on what happens when our clients are doing things right? How can they save taxes? And yeah, and that was it. I kind of, after the cruise, I think I just emailed my table of contents to Josh and Brandon, and they said, yeah, this looks good. And
Got it.
yeah, that's
Got
how
it.
I got started.
Rest is history until we have the Gen X book that comes out here in the next couple of months, hopefully. So,
Yes, and I'm going to say, yes, I'm going to say you're the inspiration for that.
got it. Got it. I'll take a 10% royalty. That's all I need. Um, Fact or fiction, I guess, in this regard, and I think I know the answer, but it's extremely important if somebody's investing in real estate to hire a CPA who is also investing in real estate. Fact or fiction?
For me, I feel like it's a fact because real estate investors have a very different lingo that we use and different types of transactions, right? I mean, the term real estate investing is sort of generic, but there's all different types of investors, midterm rentals, long-term, self-storage, mobile home, syndicators versus passive. So even within real estate itself, there are so many different strategies depending on what investment strategy you're using. So for someone to be working with an advisor who also does investing, a lot of times they're looking at the whole transaction, not just is this a good tax decision, but also is this a good investment decision, right? And if you're not in real estate, you might not be able to look at all of the details of that.
That makes sense. What is it? I'm assuming you've had clients come to you that maybe came from, more of a run of the mill, I'll call it CPA, my words, not yours, but somebody who maybe isn't specialized in the real estate space or investing in real estate or whatever. Are there like 2 or 3 common issues, pitfalls, mistakes that you see made by non-real estate focused CPAs when you intake a new client? Or, because in my mind, look, I invest in real estate. I have a CPA who owns a real estate tax accounting firm, right? So I agree with you. I think it's fact. Like, I'd rather have somebody that speaks the lingo. It's like, I'd rather take parenting advice from parents, right? Like, same sort of thing. But I'm curious, like, the IRS code is, I know it's huge and everything, and an accountant to some extent is an accountant, like it's their job to understand it. But where do you see the mistakes being made most commonly in prior returns files, strategies in place, or whatever, if the prior CPA was not, say, an investor or focused on investors?
Yeah, I mean, there's so many. Unfortunately, there's so many mistakes that I see time and time again. I just got off a call with someone who was supposedly a real estate CPA right before talking to you. I was personally a little bit shocked by some of the things that they didn't know. But I think if I had to pinpoint to like one thing that someone might not really know if they don't work with investors a lot, is the whole concept of cost segregation. So our ability to as investors to not just take depreciation on a building over 27 and a half years, but we get to accelerate that. And so when you hear people talk about, oh, I got a rental property and it wiped out my taxable income, a lot of times they're using this strategy where the IRS allows us to write off a big chunk in the initial years of investing. And very frequently, I have to talk to other CPAs who are not aware of this, or even when they become aware of it, they feel like there's something wrong with it, almost like it's illegal or it's something that you just cannot do. So yeah, that's something that I see a lot, not only like people don't know it, because I think if you think about it, it almost seems illegal, almost seems like, why am I allowed to do that? How come I can write off, so much, right? I didn't lose the money. So I can understand the thought process behind why they're, like maybe not comfortable with it, but I think that's one mistake we see time and time again. And I always, I had someone recently, a friend of mine whose dad is a real estate investor for decades. And just as a courtesy, I said, let me take a look at your return. We'll see what's going on. And same thing, lots of commercial property never took accelerated depreciation. So he went back and talked to the CPA and said, why didn't I do this? Or he said, can I do this? Can I do accelerated depreciation? And then the CPA's response was, sure, why not? I said, well, what do you mean you didn't tell me all these years?
Why is that? Why would a CPA not? That's got to be sort of there's probably a segment of the industry that's that way. Is it just like, look, I'm here to file returns. You tell me what to do, I do it. I'm a monkey see, monkey do kind of. Is that it? Is there sort of like a mindset around it that, like, don't advise because then you get in trouble? Like, what's the deal?
Yeah, I think you're right. I think no one has asked me that question, so I'm glad that you're posing it. I think that's true. CPAs or accountants in general, right? We are not the most creative people. Most accountants are rule followers, and so I think a lot of people see their job as just reporting numbers, right? You give me the numbers, I put it on the form, I make sure I'm calculating again additions, subtractions. I'm doing it correctly, but that's not how you save taxes, right? To save taxes, you have to plan ahead. What type of property should I buy? What kind of entity should it be in? How do I make sure I can use the losses against my, W-2 or other business income? So I think that unfortunately is just something missed, like coming through the ranks when you go to school, people aren't teaching you, how to be strategic, how to spend the time planning. And I think part of that too is as a profession, um, our profession is so deadline driven.
Yeah.
And so a lot of times, the only time you talk to a client is tax deadline. And that's the time when you just have so many things going on that you're maybe not thinking, what can I do to help somebody save taxes in the coming year? So one thing I always encourage investors to do is to be proactive and reach out to your tax person. And I don't mean like March and April, right? You're going to talk to them anyway, but after the deadline or before you have a large transaction on an acquisition or a sale, reach out to them and say, hey, let's talk. I just want to tell you what my plans are this year, what I want to do for investing, what I'm doing for my business. And it's just from those conversations that they should be able to help you with some planning.
Mm. Okay. Makes sense. It's funny. One of the guys on the men's side, a good friend of mine, is a cost seg engineer. And I'm amazed at how many times I go to an event, a conference for GoBundance, and I'll talk to somebody that has, I think they may even understand the concept for like, oh, that's for big apartment buildings or whatever, cost seg. But they got an $800,000 short-term rental and they don't really think of it in those terms. And to your point, they're like, wait, can I? Not maybe to the point of like, is that even legal? But like, are you sure that's doable? When somebody comes to you with that, like all the way up to, is that legal? How do you explain that it is? You know what I mean? Like what settles the mind? It's, I understand that you can cite the code, but what tends to settle somebody on, oh, okay, so it's not this perfect thing. Are you just talking about like recapture on the back end? Like, how do you get somebody on board with it?
If it's a CPA that I'm talking to, right, which I talk to
Well,
other
sure.
people's
Yeah.
as well. Usually it's just looking at the code, right? Because that's what most accountants we want to see. Like if someone brought me a creative strategy, I would want to know like, how do we arrive at the fact that we can do this? So that's pretty easy to do. I think for investors it's just giving them the facts. I think you're exactly right. Very, very frequently people will say, hey, cost segregation is not for me because I am not, I don't invest in multifamily or commercial property. But especially now with bonus depreciation, we are seeing huge benefits for properties as low as $200,000-300,000, right? And especially if you have a portfolio of several different smaller properties, the benefit of it really adds up, in a given year and can be very powerful. So it's interesting you say that because I also hear the same things time and time again. I think the other thing that unfortunately happens is I'll meet people at, some of these conferences and we talk about cost segregation and they're just absolutely sure that their tax person has already claimed it. But I always tell them, no, if you did a cost segregation, you know about it. It's not something that the CPA is just making up on their end, right? Because odds are your CPA is not an engineer and do all that breakout. They're specialists like your friend who does that kind of stuff. So sometimes investors are like, oh yeah, my CPA is a real estate CPA. I'm sure I've already done a cost segregation.
What's the after? Well, I guess first question on this on the phase out, because we're at 80% this year, right? 2023 as we record this, it's 80% you could take in year one, and I think it's phasing down to zero, right, over the next 4 years or so.
Yeah.
I guess this is just your opinion. What's the chances that actually happens? Do you think? Do you really think it's going to go all the way to zero? Is it like, yeah, there's momentum there, even if the president changes, or is there enough noise? I'm not listening, so maybe you hear enough of a pushback, lobbying, or whatever to make that change in some way.
Yeah. Is it possible to go back, back to no bonus depreciation? Definitely. Our whole lives, like for me, even, investing way back in like 2008, 9, we never had bonus depreciation. Cost segregations were still super powerful. Especially the larger, the higher the purchase price of a property, the more beneficial it is. So I think even if the bonus depreciation does get phased out to zero, this is still going to be a great strategy that real estate investors use. What's the possibility of, that not happening? I think it's also very high. I think it depends a lot on the politics, right? Who's in charge, but also on the economy. I mean, the purpose of all these depreciation, accelerate depreciation, is to incentivize people to invest, right? Invest money, buy assets. So I think where we are in the economy is going to be a big indicating factor on what happens to the future of bonus depreciation in the coming years.
Got it. You made me sweat with a recent post of yours. It said something like, it was a Q&A that you did. Can I just use my credit card statement to prove my write-offs? And you said, no,
so you follow me on Instagram, huh?
You need the receipts. Yeah. I like to do a little research before I have a guest on. And I wanted to ask you I mean, I get the point, right? Like I take a photo of the receipt, store it. There's apps that do that all of that. I'm just terrible with that stuff. But anyway, the IRS, there's all this talk about 70,000 agents, or they're not agents, but employees, 10 years, whatever it is. There's also the defunding movement now, right? Like just go full consumption tax and everything else.
Right, we're going this way or this way.
Yeah. It's right. It's either.
We'll be in the middle.
But there's momentum, I think, toward the hiring of 70,000 agents. And I actually saw somebody recently say somewhere, and it's on the internet, so it must be true, kind of thing.
Yeah.
Oh, they've already hired them. They already have an outside firm. They're already hiring these people or whatever. There's others that say, like, come on, the government doesn't have to hire 70,000. The government's always in its own way. It's always bumping into itself. Like there's no way they're going to execute on that. What does this look like from your perspective? Again, I know that you're not promising anything to anybody in answering this, but just when you hear they're going to hire 70,000 people, I don't want to say how seriously do you take it, but what's your perspective? Is this real? Yeah. Should people be worried right now? Like go back and dot every I and cross every T on every return, go back and modify returns, do everything you got to do. Like they're coming for you. Or is it just like, it's great political fodder that the rich are going to get their reckoning because the IRS is going to be ramped up by this many people? Where are we, Amanda? Help me. Where are we?
Do you have 2 hours for me to talk about this? Because I'll tell you what I think.
Much as you need. Yeah, no, I'm just kidding, but go for it.
So, one thing is, if they have the budget to do so, right? Have the budget to hire people. Practically, what does that look like? And I'll tell you, graduating from college, if you're top of your class, your goal is not to work for the IRS. Okay. Your goal is to work in one of the big four, right? Because you want to be with the top of that's the cream of the crop. So, and even then for me as a firm owner, our firm has grown tremendously, very difficult to hire people to come work for us, right? And so I think there is a hurdle in terms of how quickly they can hire people to start working there. And then from there, there's a training process. Again, people who are experienced, people like myself, I'm not dying to work for the IRS, right? I'm not just going to shut down shop and be like, let me, go over here. So to find people who are strategic, who are really well-versed in the law to represent the IRS is going to be difficult. So then you're thinking maybe they're going to train these new hires to kind of get to that level. So there's the lag in when they'll have the capability to do all that stuff. I mean, not to say that it means we shouldn't document all of our positions. We should still definitely do that, but it's not as scary as I think some accountants make it out to be. And, we fortunately for us, we don't have a lot of audits go through our office, like the tax returns we work on. But for the ones who do, I have to say, IRS auditors, they are nice, normal people. So I really don't like it when CPAs are out there talking about crazy IRS stories and, they're like basically like the SWAT team. That has never been my experience. They're doing a job just like how we're doing a job, and they're very reasonable people too. So I think for any investor, just because, they now have billions of dollars for IRS funding, it doesn't mean we run away and stop claiming expenses. We stop claiming our home office, right? That's the most ridiculous one. People are always like, oh my gosh, you'll be audited because you have a home office. So don't fall victim to that kind of scare tactic mentality.
It's good marketing. No,
it is
for a
good
CPA?
Marketing. Yeah. I mean, sometimes I read some of these things from other accountants and I get scared. I get sweaty too. I'm like, is this true? But it just hasn't been my experience,
When you first said about like top graduates not looking to go work for the IRS, like all I had, what was the guy? Chris Farley played him, a van down by the river. Like a bunch of those folks, like bottom of the accounting class, are going to be running through, IRS jobs and taking us down. Oh boy, that's scary when you say it that way. That's what hit me. Like, oh wow, they do have to hire like the opposite of the cream of the crop if they're actually going to hire. Because, like you said, who's going to, right? I don't know. Like, no one's running for those jobs. There's so much more. If you have any sense of you, there's so much more about you, I should say. There's so much more opportunity, in the private sector, doing what you're doing, working with clients, right? So
Right.
that's a
It's a
great
lot
point.
more of a rewarding job, I would say, than working for the IRS, right?
Yeah, well, you're right about the vilifying too. Like, yeah, I mean, it does. It scares you a little bit. What's wrong with the concept of defunding and a consumption tax makes sense to me on the just like flat tax. It always was like it's easy. Everyone pays X, right? Like the more I consume, the more I pay. I get it, right? Like, what's the problem with that from your perspective?
Well, I mean, so the whole purpose of the IRS code section is really to incentivize us to do certain things, right? So as real estate investors, we're providing housing, so we get write-offs, we get depreciation and all that stuff. And so if we take that away, then you're taking away some of the power of the government to try to incentivize us to do specific things.
Mm.
Like then we'll no longer have solar credit. So what if government wants us to have electric vehicles or put solar in our homes? Then, well, now there's not really a way to incentivize that because we don't have an income tax to offset. So if we're taxing people on consumption, then I imagine how do you avoid that? You just have less consumption, right? Less consumption, and maybe the result is the economy is not doing as well. So I think, like you said, politically, it's a good talking point, but practically speaking, it's just not something that has worked in terms of our taxing system.
Yeah.
So, it's funny, I did a post on that, right, about abolish the IRS
Yeah.
and on my Instagram. And somebody said, yeah, great. Well, that means you won't have a job anymore. And I was like, if that's really the worst part that comes out of it, I think that I'm okay with that.
Well, you like you said, you've created a real estate portfolio for yourself, right? So you've had the look. I just talked to a friend of mine yesterday who works for a company, a large company, like a large retail company, and they made a commitment this year to their learning department. Like this is the year of learning, right? He's in that department,
Love
and then the 10 top people in that department were just let go yesterday. Like they wiped them out. So like they made a commitment to the learning department, and then these 22, 25, 30-year employees who have accelerated themselves to the top of this department, that's the focus of the year, gone.
Right.
And he was telling me this guy, his boss is like 46, 47 years old, 25 years with the company, and now on his ass. He doesn't have any prospects. He doesn't own real estate or anything like that. So, you've
Yeah.
made the move to secure yourself. Not that you don't love your career. I always talk about like leaving an unfulfilling career. People mistake that for like, you shouldn't have a job. It's like, no. If you truly love what you do, go do it. And then, but yeah, you should protect yourself with something on the other side of it. Right.
Yeah, it's really interesting you say that because, I was talking to a friend as well who's looking, she does private equity stuff and just looking into maybe possibly, earlier retirement kind of thing. And I started thinking like, how come I don't think about retirement? I could stop working tomorrow too, right? But it was just the conversation. I just started to realize, like you said, if it's something that you're passionate about and you love doing it, then there's nothing wrong with continuing to do it. But at the same time, having that passive income, the portfolio income that's coming in for you. When we started investing in real estate many years ago, it was shortly after my dad, who was like, very young, he was like in his early 50s at the time. He just had a massive stroke.
Mm.
So I had to do a lot to kind of help care for him. And I really, felt that importance, right? Like you have a job, you can't really be taking care of your dad, at the same time. I think those two don't really work.
Right.
And so we just never know who's going to get sick or who might need anything. So that's why I think it's so important to always work, making sure our money's working for us.
Is your dad still with us, if you don't mind me asking?
No, he
He
passed away
passed.
about 10 years ago. But
Sorry to hear.
I was so happy that I got to spend, he was sick, very sick for about almost 10 years. And so I was really fortunate, right, that I was able to have my business and have my real estate and be able to spend a good amount of time with him while he was still here.
Yeah, no, that makes sense. Those events are they're always the ones for me, at least. Like when you hear of an early passing or a stroke or whatever it might be, it's like you just don't know. And it's funny on the job thing. I think I think the distinction on whether or not, this is me, whether or not it's time to think about walking away is when you are going from alignment with love to defending that you like. And what I mean by
Mhm.
that is you spend the most time, I think, job, family, and maybe yourself outside of sleep, right? Job, family, and yourself. And I just think there's a standard for my family and for me that can't be anything less than love. Like I
Mhm.
don't want to just like my kids or like my wife. You know what I mean? I wouldn't be there if it was just liking them. But if the day job, and I hear this from a lot of people who are like kind of exploring this idea of I want to leave my job, and I do a lot of content on that. And they come to me on that, and when I start to kind of ask questions, they go, but look, it's not like I don't like what I do. And I'm like, well, that's beautiful. Do you
Yeah.
like your wife? Do you like your husband? Right? Like shouldn't be the standard for you to spend 40, 50 hours a week. If you love
Right.
it, great. Then you're not talking to me about it. Right. To your point. But the moment that love becomes like, and it could happen, like anything, like any relationship, like I used to love this, but it's okay. I like it. I'm good at it. I'm kind of in routine. I don't feel like I'm growing as much or whatever. That to me is the standard by which it's time to think about walking away. I don't know. That's just me, but I don't know if that triggers any
Yeah.
thoughts for you, but I'll let you.
Yeah, for sure. I think my husband and I kind of went through something similar. I think like a lot of newer investors, right? This concept of like, I want to quit my job so I can do real estate full time.
Yeah.
And so we went through a phase of that. And it was, we're like, okay, we're gonna do multifamily, right? Like what you do. So like, we're gonna do multifamily. We're gonna, go out and buy apartments. And we started like having to source deals and start negotiating with sellers. And then we quickly realized we were like, no, you do it. It's like, no, you do it. So just kind of, back and forth,
Yeah.
versus, when we're like talking with clients and doing tax strategies, like we both wanted to do that. And that's what
Yeah.
we thrived off of. So I think sometimes it takes you actually trying something to then maybe also realize like, oh, wait, what I'm doing is actually my calling. This is what
Mm.
I was, born to do. That's what I enjoy. So yeah, sometimes you just kind of have to try it out because the grass is greener on the other side, maybe, right?
Maybe. Yeah. No, you always do. I agree. Like that's the thing that we don't give ourselves in our 30s and 40s is the what you would give a 22-year-old advice on. Like, go try things.
Yeah.
Go do things, then you'll figure out what you like. But for some reason, when you're 40 or 35 or 45, it's like, oh, you can't, you're past trying. Like you have to know and know only one thing, it seems, So we talked about receipts as the thing that made me sweat. Are there, outside of and more broadly, I know, you talk about tax strategy versus tax filing, right? Like, it's about strategy, not just filing a return. But are there three like in tax season right now, people are starting to get ready to kind of pull all this stuff together, get with their accountant, do all of this. Are there 2, 3 things, the receipts maybe being one of them, that you see commonly overlooked or missed just generally in this time? Like as people are getting ready to file their taxes and move forward, like what are some of the big, I don't know, hiccups, mistakes,
Yeah.
landmines that people trip over?
Yeah. To the concept of receipts, because I want to make you feel a little bit better and not stress as much, so that was just my Instagram post, right? My post
Good.
was just,
Clickable.
keep the
Yeah.
receipts. But I think it's, beyond that, of course, I mean, as a real estate investor, for example, there are certain things you probably don't have to have the receipts for that are clear cut, that it's real estate. So, you paying to go to the best ever real estate conference, right?
Sure.
I mean, the credit card shows exactly what it is. So the receipts are more for things that are, could be more detail required. Like if you bought stuff, you have a charge from Costco. We don't really know. Did you buy diapers for the kids or did you buy paper for your home office? So things like that. Maybe hopefully that will make you sweat a little bit
It
less.
does a little bit less. Yes. Thank you. What I do, honestly, I go through, hopefully nobody from the IRS watches, but I go through, and this is so how terrible I am with this stuff. I go through at the end of the year, the entirety of the transaction volume on my credit card that I use for like business. Well,
Business,
I
yeah.
say it that way. Like it's just the card that I use to make sure it's all in one spot. I'm literally digging. I'm gonna have to not post this episode, but I'll go through and it's like, okay, I know what that is. Yep. I can, I don't know what that is, or I'm not confident what that is. So skip it, which is terrible. That's where honestly, I'm probably hurting myself more than I'm exposing myself to doing something wrong, because I just
Mhm.
sort of like, wow, it's not worth it. And at the end of it, there's probably thousands of not worth it that if I had saved the receipt, I might have been able to
Mm.
say, oh, actually, this portion of it is something I could have written off. Right. So anyway.
Yeah, yeah. And I think that's what the role of your tax advisor is, right? So you have all these things like you download everything. These are for sure. And there's maybe a handful that are questionable. It could be a quick email, right? Or a quick 10-minute phone call and say, let's go through these, some of the, of course, especially some of the important ones, like, a significant dollar amount. Let's make sure we, have clarity on whether something is a business deduction or not. But yeah, I think, so you had asked like about common mistakes that, that's one of them, right? So if you as a business owner or real estate investor, if you're not capturing those expenses, your tax person never sees it, right?
Right.
So if you're already saying this is not deductible, not deductible, that's it. And so because you're sort of that first gatekeeper, making sure you track everything, whether it's receipts or just the numbers themselves, make sure you track it,
Excuse
because
me.
whatever you don't track is automatically lost.
Yeah.
Um, I think something else that we see, especially this time of year, is, you just have people who go out and make changes to legal entities that maybe don't tell their tax person about. So maybe, formed a new partnership with somebody or invested in somebody's deal. As the year goes on, if you forget about it, sometimes tax returns gets filed, and later on you realize, oh, I got a K1 from this syndication that I invested in.
Yeah.
So we see this a lot. And that's why we always ask people, like, take your time, go back and think about what your investments were, which ones are we waiting for K1s or, other documents that might be coming. It's little things like that. You file a return and then later on you get some new tax document. You have to go back and file amended return. Just a silly thing to be doing that could significantly increase your IRS audit risk. So I always tell people, like, take your time, in doing that. Don't rush through it.
Do
Just
you
take your time.
do you have the ideally organized client? You're making me feel better that not only am I disorganized, but many others are. But is there a client that you would say, oh my God, this guy or gal has got their shit together? Like it is like, wow, like lockdown. Do they exist?
Yeah,
Oh,
we do. I mean, there's a lot of people. I meant no.
I was hoping
Nobody's
no. I
like
was like, they're all screwed up like
sorry.
me. So anyway, go
Yes.
ahead. I'm sorry.
Yes, everybody. Yeah, nobody is.
Well, but what
I
what are
think,
what is the attribute there? Like, I mean, is there like common tools? Is it like they're militant about Excel, or like I'm just curious. Like maybe it's not as far a reach as I think it is to become a bit more organized. But like, what do you see? Is it just their personality type, that way they were born? Like you could tell I'm there, or is it
yeah,
something that they do tactically that's like, oh, actually, it's
sure.
really easy. They just do this.
Yeah. I mean, I think two things. One is having systems in place, right? So having a system meaning, okay, when I have expenses, it goes into this bank account, always
Mm,
using that same card, always using that same ATM,
mm.
debit card to pay for those things. It helps a lot
All right,
versus
good
you
on
having
that.
to go through, hundreds of, yeah, like, so you're already there, you're halfway there. I think the second attribute was just attribute, which is probably even more important, is just keeping that line of communication open and seeing your tax person as a team member. So, in real estate and in business, we have our team members, right? That we're always talking to or emailing on a weekly basis. And your CPA should be the same. I mean, probably not daily or weekly,
No,
but
I'm
whenever
afraid of
you do
mine.
some,
Yeah. She's really detailed. And I always feel like it's like, I could come with, here you go. Like the piles of whatever. I always
oh
feel
man.
terrible. Every time I email her, it starts with an apology, even though she's probably like, I got a million clients. I don't really care. But it's always like, here's stuff. Like, what do I do? So anyway, I'm sorry. Go ahead. You were saying.
Yeah. I mean, but that's okay, right? The goal is not for you to be a CPA. The goal is just for you to let them know what's going on before you do it. So like I'm buying another multifamily, or, if I'm doing a new syndication, and like, what, here's where the property is, here's how we're structuring, any comments or feedback. It's just from those simple updates where they're kept in the loop and they could advise you on, what to do or what not to do. But I think you're right. People are afraid, or they just don't want to talk to tax people. It's kind of like unpleasant, it's quite unpleasant.
Yeah.
But if you are someone who, if you have a system in place, you have a good relationship, it's not always scary. I find it so funny because now that I'm on social media more, I'm starting to see a lot of my clients on social media, and they post a bunch of tax stuff. And, I also kind of get that cold sweat sometimes. I'm like, oh my God, is this correct? Are they saying the right things? But I also love that, it's like they like taxes enough to talk about it and share what they learned. So
Well, and the ninja trick in there somehow is that by putting that content out there, they're showing movement toward rep status, right? It's got to be in there. So other than with me, what percentage of your time when you speak to a client or potential client is spent as a therapist? I got to believe it's a huge part of the role.
Therapist, I don't know. Sometimes, yeah, maybe sometimes a marriage therapy too. We've seen that where
I'll
one
bet.
person's gun ho about doing something, other person's kind of like very reluctant to do it. Since you mentioned real estate professional, right?
Yeah.
It's
Yeah.
always
Yeah.
like, how do we convince them to really do this instead of just,
Got it. Got it. On the social media stuff for a minute, I'm just kind of curious about that because that is something I don't know why. Like I'm a social media guy. I believe in the power of it. I think it's something that could be leveraged instead of used. Like, people like, oh my God, I looked at my phone and I was on Instagram for 5 hours this week. And it's like, well, but I engage with people, right? It's like that's just not email there instead. You know what I mean? Like it's a
Yeah.
leverageable asset, if you will. Talk about that for a moment, because I think there's a lot of resistance, especially from people maybe my age, that look at it like, look, I don't want to share my breakfast on Instagram stories and da 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 da. But like for you, what's the power of it? Why do you use it? Is it something that you were reluctant to do, or did you come around? Give me an idea of your use of social in this day and age.
Yeah. Well, I have to say I'm a total newbie when it comes to social media. Just a year ago, I was like, how do I log into my Instagram account? Like, where's my password? So that's how little I used to use it as, even last year.
Yeah.
So this is interesting because we were talking about IRS hiring people. The reason I started getting on social media was I was talking to Brandon Turner, and I said, you
He's not
hire
on
the most.
social. He doesn't like social much.
He
Yeah.
doesn't, yeah. I was like, how do you hire like the most amazing people? I have a very hard time finding people for my firm. And he says social media. Most of the time people come to me through social media. They know me, they love me, and they want to work with me. And so I said, okay, I'm getting on social media because I want people to see how cool it is to work at our firm. And so that's how we got started. I really had a lot of fun with it over the last year. I think for me, one of my goals is always to try to bring this very dry, complicated topic to everyday investor, right? So we kind of accomplished that with the book, but doing it on social media for a tax person is just like another level. Like, how do I make it interesting enough in 15 to 30 seconds? So
It
it's
is a
always like
challenge.
my challenge every day, but it's also quite rewarding. I think it allows me to be a little bit more creative than what I'm typically doing, like 9 to 5 on the tax side. So
Have you found any employees yet through social?
I have, yeah. So I have had a lot of people contact me, about like, yeah, it looks so cool to work. Looks like it'd be cool to work with you. I've also just got to meet a lot of different people that I never thought I would meet, like some celebrities and athletes that follow me and I didn't even know. They'll sometimes like they'll reach out with like, random questions or want to work with us. So definitely been amazing, like just things I didn't know, byproduct of being on social media that I wasn't even expecting.
Interesting. What's the next phase for you? So is it, I mean, you have your practice obviously with Keystone. And we talked a little bit about like you're happy, you love what you do, and you're kind of going along with that. And if one day you decide you can just walk away. But is it expansion of the real estate portfolio? Do you have, going into a new economy? Are you pausing? I'm just kind of curious what's sort of the next 12 months and the outlook for you as you think about it as an investor or as a businesswoman or whatever it might be.
Yeah, I think it's both. We're always continuing to grow our firm. So yeah, for us, it's kind of hand in hand. We grow our firm, but also with the profit we make, we try to reinvest it and grow our real estate side of things. I think the last probably year and a half, we've been spending more of our time on the business side. And then on the real estate, just doing passive investments. And, so far it's worked out well. So we picked up, a couple single families of our own and quite a few syndication stuff. I think that's been a good balance. Also because we have young kids, my husband and I, we have a 4-year-old and an 11-year-old, and they're both into sports. So I think in this coming year, probably just, more of that. And yeah, I think, really fortunate that, as a real estate CPA, I get to kind of double dip. I get to work with my clients on their planning, but I also get to see their portfolio and see what's
Mm,
working and not working, and really be able to piggyback off of that to do our own wealth building.
makes sense. Go Abundance Women. Talk to me about that. Why join? What it does for you? What's the value for you, if any, of being part of a community like that?
Yeah, this is interesting. So I was actually invited to speak at a couple of the Women's Go Abundance events. And as a speaker, you get to just kind of hang out for the rest of the weekend. And I got to know a lot of the ladies and just really hit it off. I think for myself and maybe a lot of people, day to day, right? You're just, you're working, have you taking care of your family, doing real estate. And it really was an opportunity for me to work on the business, to step
Mm,
outside of my day to day, and work on the business with other women who are doing phenomenal things, with respect to their real estate and their businesses. So I really just like that connection. And I was kind of going back and forth, like, should I join? Should I not join? I'm so busy already. I can't remember who told me, but someone was like, why not? Do it for yourself, right? You deserve it. I think was
sure.
what they said. You deserve it. You deserve to have the time to work on yourself, and and to be away from kind of just the daily grind. And I thought, yeah, I deserve it.
It's funny. I've been a member on the men's side for 4 years, and I get asked the same question a lot. Like, well, what if I don't have time? And I always say this, like, nobody has time to be part of it. Nobody
Yeah,
that's in it has time to be in it, right? But I
exactly.
look at it more like buying in the right neighborhood. Like I'm not
Mhm.
always if I'm going to buy the house, maybe pay a premium to live in the neighborhood that serves me and my family the best long term. But it
Yeah,
doesn't mean that I'm at every backyard barbecue and kid play date. And if you have like a golf course clubhouse, like every 80s trivia night or whatever, like I'm not at all. But there are times when, it's kind of, not much going on. I can engage more. And there are times that I can't engage much, but it's always there. Right. So like in
yeah.
the moments that I need, I can sort of plug in, plug out, get on a call, have a better conversation maybe than somebody I work with or worked with or whatever it might be. So, yeah, that's how I've always viewed it. Like if time can't be the obstacle, because there's never time.
Right, right,
You're always going to
right.
be too busy. Kids, job,
Yeah.
career, real estate, just life, travel. It's hard to have time, but it's there for you. That's the investment, in my opinion. I don't know.
Yeah, and I think it's always good to, for me, I like to be held accountable. So like you said, sometimes we don't have
Yeah.
time, but we'll have a text message with our pod, like, "Hey, let's do it." We're all busy, right? It's like, Amanda, you're not the only one busy. Everybody's busy. So we say, yeah, well, if they can do it, I can do it too, right?
Yeah. Yeah. Exactly. Let's wrap on the GoBundance card game question. Is the nine of spades. Spades is the upside down heart, right? The club is the three
Mhm.
circle thing. Anyway, it's the black one. Nine
Yes, I
black.
think you're right. I
Yeah, I
think
think
you're
I'm
right.
right. I don't know. So what's the most you have spent on a gift for someone? And this can't be a write-off. No, I guess it can be. I'm just kidding. But what's the most you spent on a gift for someone?
The most I've spent on a gift for someone, gosh, oh, it's difficult to say because if I buy something with my joint account for my husband, does that consider a gift?
Sure. Sure. All rules. There's no rules
Uh,
here, accountant. We don't
yeah,
need the
no
perfect
rules.
spreadsheet. You
And it's
just go.
yeah, and it's sort of a write-off too. So it was a car. And this is an interesting story. It kind of makes me mad. But when we had our first kid, we decided we needed a new car. And so we got a new SUV for him.
Hmm.
Um, and my friends always make fun of me for that because I think normally when you give birth, the mom gets a present, right? It's like called a push present or something. But I gave a push present to my husband.
A
Yeah.
push press. That's awful. Oh,
Oh,
that
you
sounds
haven't heard of
that
that term?
sounds painful. Isn't
Well,
the baby the
that's why.
push present?
Yeah,
That's a guy's.
true.
That's a guy's mind. I'm just kidding.
Yeah, exactly, exactly. So yeah, that's probably like the most expensive gift, I would say.
Was it like 10,000 pounds or more with
6,000. Yeah,
6,000,
6,000.
whatever it is? You got that size SUV. I don't even know that rule was in place 11 years ago, but interesting. Well, hey man, where can people learn more about you, reach out, whatever it might be? Just social media handle, whatever you want to share with folks so they can learn more about you and what you're doing.
Yeah, if you want to know more about how to use real estate to save on taxes, my website is the best place to check out. We have a lot of great free resources and tax updates that we put there frequently. It's KeystoneCPA.com. If you just want daily funny tidbits about tax tips or what I'm eating for lunch, you can follow me on social media. I'm typically on Instagram as Amanda Han CPA. And I will say I am sort of famous enough now where I have a few fake accounts. So I was very
Ah,
excited.
isn't that like I've had three? I think three. Isn't that like the most like in the moment you're like, God damn, but pretty cool.
You're like, you've made it. You've made it. You know, people want to
Right.
be fake you. So
Fake
yeah.
me. Yeah. Yeah. Jam Lee Gruber, the L instead of the I had. It's crazy how they
Yeah.
do it. So
So yeah, if you're following the right account, just I'm not going to sell you Bitcoins. I'm not going to ask you for tax return
yeah.
copies at all via social media.
Perfect. Perfect. Well, Amanda, thank you so much for being on. I appreciate you taking the time.
Yes, thank you.